This is going to be one crazy week for semiconductor and AI investors, as we do know that Nvidia is reporting earnings this week. Now, what I want to do in today's episode, since I already did my Nvidia earnings preview yesterday, I kind of want to take a closer look at some other things impacting the AI market this week that you should know about. And I also want to share my overall thoughts on Intel. The stock finally got the confirmation that it did get that investment by the United States, and it is diluting its shares to welcome this new investor. So I want to share my overall thoughts because I do think the market is a little bit weird here. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, I just want to give my thanks to everybody that has subscribed to the channel. We just hit 75,000 subscribers. Now, if this is your first time here, this is the place you're going to get the best semiconductor and AI news. Obviously, there's other channels out there that cover various sectors, and sometimes they cover the semiconductor space when it's cool. This is a channel that you're going to learn about the semiconductor, the AI market, and everything that falls within that space. So it's going to be the best place. It's free. Make sure to hit the thumbs up and the subscribe button. Now, I need a new goal by the end of the year. So let me know in the comments below. What do you guys think we can get by the end of the year? We have about 4 months to go. But again, first, I just want to say thank you. Now, I want to kind of start off with the overall week. What am I curious about as a semi and AI stock investor? What am I curious about this week? Obviously, the most important is going to be Wednesday. We do have Nvidia reporting earnings. Now, there are some other interesting companies, Snowflake and CrowdStrike, that are very dependent, or at least a strong player in the AI space. So CrowdStrike and Snowflake are going to be some interesting ones. To be honest, though, Wednesday, I'm only going to keep my eyes on Nvidia. We also have HP on Wednesday and Dell on Thursday, which are both companies that end up building AI servers, so they can kind of be seen as a competitor, and kind of just how, if you are a super micro investor, you're going to want to watch those two to see if there's anything different that maybe companies like Supermicro did not say, and how are their margins going, right? I know one of the big things with Supermicro is their margins taking a massive hit. For Thursday, though, like I mentioned, we have Dell Technologies, but the one I'm really curious about is going to be Marvell. Marvell is one of my favorite semiconductor plays right now. This is one that I want to continue to invest and increase my overall position in Marvell. They are one that, in my opinion, can benefit dramatically from the ASIC market, not only in AI GPUs, but CPUs and other types of semiconductor products as well. So Marvell is one I'm also going to keep a closer eye on. Now, kind of jumping outside of earnings, there is a very techy semiconductor event going on today. Let me just say, if you're AI semiconductor investor, you don't need to know about this event. This is more kind of for, like, if you want to get into the technical aspects. I, as an engineer who really enjoys the semiconductor space, I like to learn with what's happening as well outside of just the business, right? I want to learn about the tech, and that's exactly what this is. So here we have hot chips. So Nvidia is going to do a lot of presentations starting on August 24th to August 26th. They're going to talk about things like networking, like their co-packaged optics, like their upcoming desktop supercomputer, the GB10 super chip. I am going to listen to them. We're going to have companies like AMD, like IBM, like Intel, like Microsoft, like Google explain what's happening in the AI space. For example, tomorrow we have predictions for the next phase of AI, and it's going to be by the GDM VP engineering at Google. Again, if you are not a technical person, I wouldn't recommend this conference for you. But if I do hear anything, don't worry, I'm going to share it during the upcoming videos. So you don't have to get in with this event, but just know that if there is anything interesting with companies like AMD, like Nvidia, like Google, or any of the other players, I will be sharing what I learned from this event. So it's definitely kind of like going back to college and going back to some engineering classes. So it's going to be hard, but I'm pretty sure it's going to be fun as well. That's that. The next thing I want to talk about is Intel. So Intel has been on the rip. It was up about 5.5% on Friday. After hours, the stock is up about 1.05%. Now, for those that are not familiar, what's happening here is Intel and the Trump administration reached a historic agreement to accelerate American technology and manufacturing leadership. So first, I'm going to read this press release or the important information, and then I want to share my overall thoughts. So the US government is to make an $8.9 billion investment in Intel common stock as company builds upon its more than 100 billion expansion of resilient semiconductor supply chain. The government's equity stake will be funded by the remaining $5.7 billion in grants previously awarded but not yet paid to Intel under the U.S. CHIPS and Science Act and $3.2 billion awarded to the company as part of the Secure Enclave program. The $8.9 billion investment is in addition to $2.2 billion in CHIPS grant that Intel has received to date, making for a total investment of $11.1 billion. Now, Intel is excited to welcome the United States of America as a shareholder, helping to create the most advanced chips in the world, said Howard Lutnick. Now, the government agrees to purchase 433 million primary shares of Intel common stock at a price of $20.47 per share, equivalent to a 9.9% stake in the company. This investment provides American taxpayers with a discount to the current market price while enabling U.S. and existing shareholders to benefit from Intel's long-term business success. The government investment in Intel will be a passive ownership with no board representation or other governance or information rights. The government will receive a 5-year warrant at $20 per share for an additional 5% of Intel common shares, exercisable only if Intel ceases to own at least 51% of the foundry business. The existing clawback and profit sharing provisions associated with the government's previously dispersed $2.2 billion grants to Intel under the CHIPS Act will be eliminated to create permanency of capital as the company advances in the U.S. investment plans. A lot to uncover there, but the first thing that I want to say is Intel is giving up equity in return that this money that was supposed to come with the CHIPS Act doesn't have any of the asterisks. Before the CHIPS Act, you will have to do some form of revenue sharing, and you had to do some form of clawbacks associated with it, right? So that's gone. It's just pure money for equity instead of giving all the other things outside. The other thing is Intel is getting a better price for this. We saw the price was $20.47. So it's interesting to see Intel stock go up, knowing that U.S. government just diluted shares and just got it at a cheaper price. But somehow the market loves that. It is great to know that the government is not going to be have a board of representation, and they're just a passive ownership. It's also interesting that they have this clause where the government can buy an extra 5% of Intel shares if Intel ceases to own at least 51% of the foundry business. So are they planning on splitting up? Maybe, maybe not. It seems like they haven't made that decision yet. So they had to put this in the clause to make sure that if they do split up, the US government can buy more and more of the Intel foundry business. So again, the market is liking this. I can kind of see why, but it is interesting. Now let me kind of show kind of the other thing. So a U.S. official cited by the report said Thursday that the administration has no plans to seek equity in chip makers like TSMC and Micron that are ramping up U.S. investments. Firms not expanding their pledge, however, could be asked to hand over stake in exchange for subsidies, the report adds. So one of the things that Intel was doing, right? So obviously Intel is investing here in the United States, but most recently they mentioned that they were slowing down. Even here in the United States, they were slowing down their manufacturing build all over and here in the United States. The Trump administration obviously did not like that. Now, based on the reports that we're hearing right now, if you are increasing your investments, you don't have to worry about giving any form of equity. TSMC, for example, in March boosted their US investment by $100 billion dollars, and Micron in June by an additional $30 billion dollars. So it seems like if you've invested more than originally thought, you're okay. You're not going to have to give up any equity. Now, there are reports coming in by the Wall Street Journal that TSMC has said if you want any equity in my company, you're not going to get it. And I'll gladly give you the money back. So it does seem like Intel, mm, since they aren't expanding more than they originally thought, they actually are slowing down. It created a very negative pressure for Intel. Now, I would love to hear your thoughts. What are your thoughts here with Intel right now? Are you bullish or bearish on this kind of Intel and US government move? Now, I kind of want to share my thoughts. I honestly think Intel got played, and it got played because it's in a bad spot. We saw a way cheaper price. We see a dilution to shareholders, and other companies are getting this money and just doing your traditional revenue sharing, which is not that crazy, right? It wasn't that crazy. But Intel, because it is in a bad spot, because it's a little bit leveraged, it is slowing down on investment. It was being attacked by the Trump administration for their CEO. They had to play nice. And unfortunately, here playing nice, I think Intel shareholders got played. But I think it's also funny how the market had previously priced the CHIPS Act with no dilution on Intel. Now you're still getting the same CHIPS Act money, albeit with a $10 or 10% dilution of investors, yet prices went up. And I'm confused by this, right? So you're still getting the same money that you were promised, except now what you actually have to do is give up 10% equity in your company. And the market says, look, this is even better. But in theory, you're diluting shareholders. Earnings per shares just took a massive hit because of this dilution. And yet the market is eating it up. The other thing is we hear these thoughts of the CHIPS Act was free money. In my opinion, the CHIPS Act was not free money. The goal of the CHIPS Act is to bring US manufacturing back to the United States, providing a much needed incentive. And the government was getting a form of revenue sharing. Now, if you start to remove these incentives, or they go away, or they come with major returns or major requests like 10% equity, a company is better off just paying tariffs, right? A company could, like TSMC, can say, look, I don't want to give my equity. I don't want to pay the extra prices of building here in the United States. It's already too expensive for a labor force. I'm just going to pay the tariffs. That's better off. At the end, that ends up sucking for the United States because you end up with no supply chain strength in the USA. So it seems like the goal of the CHIPS Act was to build manufacturing in the United States and to provide that incentives. But now it's no longer that. It's just how to make money from these semiconductor companies, where a lot of these semiconductor companies outside of Intel could probably be okay without it. And they rather just go back to Taiwan or they're out. So you're no longer creating that incentive. So I do think that's a little bit interesting, and it could backfire if, in my opinion, the Trump administration goes a little too strong with it. Now, the only good thing about this, in my opinion, for Intel is the following. First, obviously, no revenue sharing. Next is the administration is no longer attacking your CEO, which obviously seems like a great thing right now. But the most important thing is, and I've talked about this. I probably was one of the first to talk about this. I'm sure I was the first to talk about this in the past. A potential trade deal that the Trump administration does with other and quote unquote trade deals with other US companies to use Intel Foundry. That, I guess, is what the market is exciting. It's like, look, I got Trump on my side. I feel like Trump is now going to talk to all these other big tech players and say, hey, throw some orders in there for Intel, right? We need some help in there. The legal issues behind that's a whole different thing. But I do believe the market is somewhat expecting some form of alley loop being created or thrown up by the Trump administration, so we can get more customers in the Intel Foundry side. Now, I do believe that would be great for Intel and for the semiconductor space, but innovation and competition needs to drive its own market. Now, I do think there are things that can go bad. If, for example, the US government, even though they don't have any form of rights as a shareholder, no board of directors, what if the US government, and again, quote unquote, pressures Intel to expand its previously halted US manufacturing? Now it's like, hey, look, we gave you all that money. Why don't you use that money to expand a little bit faster in the United States, even though you don't have the demand for it right now? I think that could create some negative internal debates within the company itself. I think that's where it's going to be crazy. It's like, now Intel needs to make sure that, one, they're not getting the government mad, but also they have to make sure that they're still doing good as a company and make strong financial decisions. But those strong financial decisions can't go back and again go back to making the government angry. So I do think Intel got played here, and the main reason it's because it's in a bad spot. But there is that potential of those trade deals that could come with US governments and other tech players. So let me know your thoughts in the comments below. I hope you guys enjoyed today's episode, and let's get ready for Nvidia earnings week. And again, thank you all for hitting that subscribe button and letting me hit 75,000 subs this on August. Hitting this goal a lot earlier than expected. Take care, have a good day, and see you all next time.